All right. Happy Friday. Happy Friday. Today is October the 3rd, 2025. Let's talk through some harmonic patterns and data. So, flipping over to our data, we will see that based upon the way we set up overnight, we have this high of day, which is a pretty big reach. And then we've got this low of day, which is not quite a reach. Our low of day is expected to be put in the first 30 minutes, possibly to the first hour, because this is a very low chance of getting that high in the first whole hour. And then after that, we're going to try to find a low probably after 10, give or take, and then try to push up through the middle of the day. And then very possibly trying to put in the high at the end of the day, but we'll see. So one of the things, well, let's look at the rest of the data. So with this set, we know we have an 85% chance to take out the high, and this is after a certain time, right? This is after about 6 o'clock in the morning. And we have an 80% chance to take out the low. And usually the most, oftentimes is 9:30, right? Because that's where we get volatility. So we had a pretty decent chance to take out the high and the low. Now, if we flip back over and look, we did take out the high at the very early part of the day. So it's hit or miss whether we do that, but if we look back, so let's just say that high is gone. We have an 80% chance to get back to the low. We already have taken the mid, so that's done. And then we had an 85% chance to get back to the midnight target. Midnight being up here above us. So ultimately what this is telling us is that we are going to pop into the open, try to get our pullback, chase the high into the end of the day, or we're going to just dump at the open and then try to run it back to get all these targets through the end of the day. All right, so if we're going to take this trade, we want to take it around the open, adding as we move up, if we move up. So, I'm sorry, I had a call coming in here. So, and I don't cut these videos, so they're just what they are. So, so there's our targets. All right. There were a couple of things that made me a little bit apprehensive to take a short at the open. So I waited until we tried. Basically, I set a target up here. And I'm going to say this, and it might make no sense to you, but I trade the Dow also. And I have noticed on days where things tend to be a little bit uncertain that we typically wait for the Dow. Now, the Dow has run a bunch, but we typically will wait for the Dow to run out 45 handles or so in either direction before the NQ continues whatever move it wants to make. So at the open, I have another screen I'm not going to show because I have an auto trader algorithm built into it. But what I look for is the Dow to run out that 45 to 50 handles. And once it does, on days that I'm uncertain, that's when I tend to enter my trade. So that's what I waited for. So I waited for the alert for that to occur. And then I was willing to take the trade at that point. So we called it up here, right? We wanted it to take this out. We wanted it to possibly take out the midnight. So we're on 5-minute candles here. So if we were to check this, right, we got that target up there, right? So, and the thing is, this isn't where the entry was taken because it took a while for the Dow to get that 45 to 50 handles and then try to continue in whatever direction. And so we caught the trade up here. So, and basically what we're looking for is the low of day. Now, first, the low of day was a bit further down here, but there's a very important piece of information that you have to understand. We're expecting this to pull and we're expecting it to sweep the low. If that's the case, then we need to change our data to show that this is broken already. Right? There is a high probability of that getting broken. It was 85%, right? So there's an 85% chance of this getting broken. Okay. So we have to go into our data and we actually have to tell it that's already happened to look and see where our proper low of day is that we're going to try to sweep into. All right. So now that that's done, now some of the high of day, low of day changes, right? The low of day is still looking to happen in the first 30 to 45 minutes to an hour. And the high of day is most probable at the end of the day. All right. So the low for this 12-hour is now 95%. All right. Because we're expecting this to get hit, now we're looking at a 95% probability for this to get taken. So we don't want this thing, if we're going to bounce it, we don't want it to get into this 6. We want it to hold up here. So we want it to just get in the high or the low of day and then get moving back in the other direction. Now, there are a few things. We're rejecting this 930 zone. Like we could talk through all the normal things we would talk about. And then we have some pattern completions up here that we got. We got an initial pullback. We set up some patterns to go up here. You know, we've got this shark-esque looking dealio. We broke through the high, got the 113, so we're pulling back. Like we could talk through all of these reasons that we were looking to take this thing back down. Now, ultimately, until we started looking at data, I was thinking we might try to pull back down to this monthly open and, you know, really try to reject. But then I saw the data and was like, okay, maybe not. So, but this is why I use data, because I want to see if I have an idea what the most, you know, probable outcome is going to be. Now, there is a potential reach lower, but, you know, statistically, we're going to put in the high at the end of the day. And so I'm not interested in shorting that down. Even if it works out, I don't care because it's not the probable outcome. All right. So now what we're looking for is we're looking for these moves down. Well, what do we have? Do we have any patterns that are setting up? Right. So we've got, you know, something like this. I mean, they're a little bit wonky. There's nothing fantastic other than we've got this 113 that we're looking that pulled back from this little shark here. Now, the shark took a long time to do, but overnight moves, you know, they're going to trickle sometimes. So that's just part of what happens. But we got this move, and then we're looking to pull back, where we're looking to really not pull more than 50-ish%, right, to get that 5-0. You know, we want to tap the 50% and hold. So we're holding inside of it. So there is this possibility that this, you know, shark-esque looking thing could continue up. All right, so if we continue to play this out, so we're in this short, and now we want to see this thing dump and hold below 930. We're still fighting to go up, still fighting to get that midnight target. And here we go. We get our dump. All right, so we get our dump to the low side. This thing pulls, touches our low of day, and really our main target was just going to be the break through the low side. Like that's where you want to take most or all of your profit, because that's really the last probable target. You can keep runners to get down into this low of day, but you also have to look at other things, right? And we were really running out of steam into the open. So into the open, what happened is the RSI indicators started really moving up without the market moving up. And that's what you want to see for a potential continuation down. You want to see those moves up getting stuffed for the market to try to dump. And so we got it. We got our answer there, right? So now what we want to wait for is we want to see what the recovery looks like. And we're going to swap over to 1 minute candles because it's going to be a bit easier to see on 1 minute candles. But so we want to see what that recovery is going to look like. So we got this 5-0 we were looking for. It was broken, right? So now we pulled down, you know, the 5-0 is no longer really valid. So now what are we setting up? Some little 1 minute patterns to try to get this thing to bounce, right? We want to see a move up and we want to see a pull back. We really want to get, you know, something with a more realistic terminal bar. And now, again, we're on the 1 minute, so you have to be careful. But this isn't too bad, right? So what we're going to measure out here, we're going to say, where did that get us? That's 50%. So Now from this entire move up, we've gotten a 50% retrace, 50% to 618, not too bad. And you want to see it. You basically want to see where this thing's going to hold. Is it going to grind up? Is it going to pull back? Right. So now we're going to flip over to 5 minute again. And we're going to look. So we've got a 5 minute terminal bar here. And that gives us a potential Gartley. Right. So you want to see this Gartley pull back further to reject the 786. But, it's kind of what it is. So when you get this 5 minute pattern set up, if you're going to take this Gartley, you still want to take profit or all of your profit at the 786. But this particular Gartley is a little different. It's what's considered a deep Gartley. If we don't pull back any further than that, this thing's going to be considered a deep Gartley. And so a deep Gartley, as Carney describes it, so when your projection, when the 100% of your projection is above the 786, you could pause this and look at this if you want, or you can go look at it in his book. But if you have a projection that is above the 786, you want to understand that this is going to move most likely it's going to move beyond the 786. It's going to reach for that 100%. And your likely rejection zones for this are going to be the 886 of the pattern upwards of the 100% of the projection. All right. So we'll leave this box here. So what we want to understand is we still want to take our profit or all of our money off the table around the 786. Now, Gartleys have a tendency when they're complete to reject pretty hard. Now, they might not do it immediately, but they tend to reject pretty hard. I don't know what it is. I'm sure Carney explains it, but they just, have this, weird thing that I've noticed where, Gartleys, for some reason, I don't know if because they're weak or what the case is. Anyway, I could blab on about this forever. So here we are, right? So if you're going to play this pattern, you have to understand a couple of things. We'll go back to the 1 minute. So one of the things that we have that have set up here, we have this little setup here with a pullback with this. So this kind of gives us a bit of a shark setup. So we have to know that wherever this shark is kind of set up from, that we're probably going to get some sort of rejection. And I know this might sound crazy, but what I tend to do is I will draw this, right? I'll draw a channel, and what I will do is I will look for where this thing's trying to be drawn from. So I'm going to assume it's trying to be drawn from here because this is where the middle is, right? I'll look for the two lowest, right, where the low side goes, and I just look for where this thing really lines up to the middle, and that's where I kind of draw it to. Now, sometimes what you'll find with bigger patterns, you'll find that they tend to line up perfectly with the high. It's pretty common if you have a bigger pattern. So what I do is I just kind of leave this in place, and I will, if I'm going to trade this, I'm going to look for this thing to not break below this low, also knowing that we've got this pattern set up here, and we could say that this shark may be from right. Yeah, I mean, it would be from about right here, the shark would be. Now, this is for the Gartley. This is not for, now the Gartley, technically you want to use it way up here when you're measuring it. But for me, I'm just looking for what the pattern inside of these channels are, because what I find is that harmonics tend to set up channel breaks. Okay, so you'll tend to find that they will hit the lows and mids and the bottoms and tops, and that's where you'll get your breaks, is inside of whatever channel this thing's trying to build. So to me, this is a weak move up, because we're not even able to reach the middle if we were to push this thing to the top. Now, eventually we will, because that's just how, the market works. And here it is right here. All right. So anyway, now we can just leave it here and see how we work around it, see if we actually go break through it or not. And it doesn't matter at this point. But what we want to see is, because of this little shark-esque thing that's setting up right here, we want to see a hold of 50% for this thing to continue up, because this is a wonky little shark that's set up that completed with a bit of a terminal bar on the 1 minute. And we want to see this thing hold a 50% pullback, which is right here. And we have so far. Okay. So if you're in this trade, that's what you want to see. You don't want to see it pull below this 50%, especially below the 61.8. And then you want to take your profit and take your money off the table here, expecting this thing to push up into this purple box somewhere out here. All right. So here we go. We'll get through this. Now these are on 1 minute candles, so we'll just watch it build and watch it build. Now what do we have here? Got another little 1 minute pattern setting up here. Now this is looking like, okay, we got to the 886. So this thing's going to try to push to the 1618 to the 1902, which again is perfect to try to reach out, because our 100%, as we said, our 100% is up here of the projection. So now we think with some certainty that this thing, no matter what happens, it's going to try to squeeze out into the 886. So now, excuse me, now we're getting into a point where we've got the 786 of our pattern. All right, so the Gartley's done. So this is where we're looking to exit. Now, if you're trying to short this thing, this is where you're probably going to want to short it. But you have to know that we're going to squeeze out potentially to this 886. It's a bit more likely because that 100% was above the 786. So you have to know that this thing's going to squeeze out higher. And we did. We got our 886. Right, between the 886 and the 100%. So now, if this thing's going to dump, where are we going to place our stops? Well, we don't want to see it go really through the 100%. It's up to you how far above the 100% you wait. But if you start going to break these highs and pulling back, there's more of a chance that you're going to try to continue this thing and push it back up into the larger completion areas of this pattern, up into 25,240. So if you want it to go up, that's what you want to see. If you don't want it to go up, you want to short this completion, this is what you want to see. And so what did we get? We couldn't get back up there, and the market dumped. Where did it hold so far? It held this low of day mid. But now, I've talked about this previously. These are the deviation zones. This is the 6 deviation zone, 6 to 6.5. We're now in it. I have very, very little interest in bouncing this. If we set up a pattern like we did yesterday, I did take it yesterday when we got down into these point of no return zones. I took a scalp move, and then I held runners for the continuation up. But it was because we had a clear pattern that set up, and there were other signs as well. But for me, it was a small pattern. It was a scalp. I rarely do that. It's very uncommon, but some days it happens. But so far today, no interest. I'm not going to have interest until I get a solid terminal with a pullback that has a really good hold on it. All right. So what this tells me is the market's probably going to continue down. It's going to be weak, and it's going to start chasing low of day reaches into this monthly open and possibly back down into the weekly open. That's a long way down. But here we are. And we have patterns to support some of these moves if we come back over here. Right? We do have patterns to support it. Right? We've got this. Like this, it's beyond the reach. This pattern to the downside, I know you could barely see that, but it's beyond the reach of a Gartley. So that's telling us that this thing's going to try to reach all the way down to 24,863 if we get enough energy to do it. Does that mean it'll happen? Of course not. Like, we're getting to the end of the day on Friday, but the pattern's there. But we still have this high of day. We never really got into it. We missed it by just a little bit. So, but this is why I trade the opens, because that's where the volatility is. Again, I say this all the time, but usually I'm trading the opens. Now we'll get rid of a lot of this junk on the screen. And so, yeah, I mean, that's the play today. We'll have to see how the rest of the day plays out. But the idea is that if we continue to sweep this low of day and stay below it, like, we can flip back over and look at our stats, and we can see that we have additional reach areas that we can get to here. We had them to the upside too, but we have additional reaches that we can get to the low side. Now, the probability is the high of day is going to be put in at the end of the day. So I'm not interested in playing this either direction, because we're moving here, right? We're moving away from what the probable outcome is at the end of the day. So we'll have to see what plays out. Let's see where we are. Yeah, we're sweeping the low of day here. So yeah, potential bounce here to 1902. I mean, I know that's swept, but it's still going to try to play out like a crab. But yeah, I mean, you'll see that they tend to do this. But either way, as this thing continues to play out, we'll see what it reaches for. But we still have, like we said, we have these bigger patterns, right? We have this bigger pattern here that's going to take us down to that 116 that we saw. Or sorry, 1618, 116. Yeah, so ultimately, a potential bounce in this area we are right now, and then we'll see. Do we continue to try to go squeeze out the high of day? It's a long way. That's what, 200 and some odd handles? Or do we continue down to this 1618, try to get this monthly open down at 24,843? So, hope everybody has a good weekend. I hope everybody had a great week, and I hope everybody had a great day. I will be back next week. I will see everybody later.